Spain received strong demand for its largest debt sale since March, raising €4.8 billion. Nike's board approved an $8 billion buyback program that is expected to return capital to its shareholders over a 4-year period. I'm Taylor Schranz, and the Morning Call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the Morning Call. We've got futures this morning pointing down after we got a slew of weak PMI data. China, for one, saw their manufacturing sector contract for the 11th consecutive month. We also got weak earnings pre-announcements, and also UBS downgraded some of the banks. Scott, what type of action are you going to look for today?
Well, that's like 4 or 5 little jabs right in the bull's belly.
Yeah.
So you would have thought that we'd be down more than 3 or 4 handles. And I think around 6 o'clock this morning, we were down 7 or 8. But anyway, all in all, a lot of what you just mentioned, we've been hearing. So it's not new news. We know that growth is slowing around the world. We also know that this earnings season is probably not going to be great. So we need to figure out what's priced in, what's not, what levels will hold, what composure of this rally will be intact. And we could do so, by looking at certain moving averages as we absorb these type of headlines.
What are the moving averages that you're watching in the S&P?
Well, if you recall, on Friday we said the market was drastically overbought. My oscillator was like plus 60, so at that particular point, put on a lot of overlays, more shorts or added to our hedges, sold some excitement, and since then we are now, 4 days later, we're a little bit below 20. So that's getting better. That's getting closer to neutral. That's working off the overbought condition. In the same time, we're letting the 8 and the 21-day moving averages catch up. Now, the bulls have been a bit spoiled, me maybe even being one of them, because typically, the strongest stocks follow their 8/21 days, not actual indices. So if you look at the chart of the S&P, you will see it's been a pretty easy ride. First of all, this is when the October 4th outside day happened. This was when the wedge broke to the upside. Here was your second quarter correction into the June 4th low. And ever since then, we've had a nice methodical move all the way to where we are here. During this move, we've typically pulled back to the 8 and 21 day. And lately, we've been just riding, that 8 day. So if you take a closer look here at this, cup and handle pattern where this was one breakout, then we flagged for 4 days, here's another breakout. All in all, we're just hovering as the 8 day is coming up, which it's right now around 1451. You also have the 21 day, which is around 1432. So overall, on a short-term basis, would bulls like to see, this 1450 hold and make it really easy? Yes, but it doesn't have to. We could even pull back to this area and still be fine. But at this particular point, short-term, yesterday's low is 1456, and resistance comes in around 1462-ish or something like that.
It's nice to see some resistance and digestion there in the S&P, but oil, for one, has been a laggard all year. This week, it's struggled the last 3 days with some big down moves. It's getting close to its 100-day moving average. Is there more downside here, or can you trade this for a little upside?
Well, technicians will say that they saw it coming, and you actually could have if you read the charts. On Monday, when the market digested or went a little bit lower, oil didn't digest. It had a potent down move. It broke the trend that's been intact since it bottomed, and oil's been somewhat of a laggard group all year. Hasn't been the place to be. It's been in a range. I personally think it's overvalued, and I do think lower prices will ultimately be good. If you look at the chart of the USO, just so you could see, how you could have actually traded it, this is when it tried to break out and failed. I always talk about a failed breakout, how if momentum leaves, you leave. Well, that's what happened on this day. And then look at Monday. Look at this potent move to the downside that took out the 8 day, took out the 21 day, engulfed the last 4 or 5 days, showing you some power. And that's when everyone said, oh, mini flash crash must be a fat finger. If it was, you would have saw more of a bounce back than this day. It didn't even take back a third of this overall move, showing you that maybe it's for real. And then lo and behold, yesterday, here's your move lower. I would say at this particular point, could you get a little bit of a bounce? Maybe I'll even trade it for a cute bounce. I tried yesterday, it didn't work. The low here is 33.96. Perhaps it goes positive, puts in a little bit of a tail like that. And then I think some people are going to short bounces, and that would be right into this area, if it tried to retest this zone. But overall, trend is broken, potent down day. Probably good for America, just not good if you happen to be long oil and held through that little mess.
No, exactly. Well, what about gold? How's that been acting since QE3 was announced last week?
Gold has been acting much better even before. August 20th, 21st, I think we declared that a national holiday for the metals because people who are long and looking for, higher positions or to get bigger tier size, that was your day. And since then, that also has been riding the 8-day. Once or twice it, let the 21-day catch up. And today, gold's down a little bit. People yesterday were saying, "Oh, look at the metals; they're holding up really well, while oil's getting pretty hammered." And so I would have thought you would have lightened up just to be a little cautious. But at this point, if you look here at the chart, you will see that the time to have bought it was on this gap up, or maybe when it cleared this flag, or when it cleared this flag. At this particular point, I do think GLD's open them like down $1. No big deal. If it doesn't hold this 170 area, you could see more downside. You could see, a bit of a correction, and then we'll have to see, can this area hold? Can, by this point, maybe the 21-day will have moved up. I would think that I would be more interested because I'm not in GLD. I've been waiting for a dip. I sold it probably a little too early within this rally. So I would say this would be a better area, anywhere between 166 to 168. If it gets there, so watch this level and then watch this. This is bigger. And sometimes, again, it might not be a buy, but it'll be a tricky short. And guys have been trying to short this thing for the last 3 weeks and then we're getting torched. So we shall see. Okay.
Well, let's get into the sector spotlight with some of the sectors to see how they've been doing this past week after QE. We'll start with tech. NASDAQ, we've seen, is starting to outperform some of the other broader indices, and that's because the leaders like Apple and Google are leading it higher. Now, that goes into what you said earlier, that the leaders are outperforming some of the indices. So how are the Qs doing, and can these leaders help continue the Qs momentum?
Yeah, well, what I like to do is I like to hold the leaders and the best acting sectors and look for Q trades in laggard type groups, or whatnot. Anyway, Qs have been leading most of the year, still look fine, a little bit extended, but I would say always look here when you want to find some kind of alpha. You take a look at the Qs, here you go. This was when it broke out, then it based above the 21-day, and then since been riding the 8. So you could see a little bit of a pullback to 69.74, but overall, this uptrend has been strong and you should be sticking with it. I don't see anything wrong quite here, but you always want to take a little bit off into the extension. You don't want to chase it.
Now, financials, they hit a new high on Friday, but the last 3 days they've been down with the market. Today this morning UBS downgraded some of the big banks. Does that mean we're going to see another down day, or is this a spot you can get in for a trade?
I would have liked them to downgrade it on Friday. That's when the reversal happened, and then it looked like they tried to stabilize. So maybe with this downgrade, the banks don't hold their 8-day. It gets down to the 21-day. Again, the banks, have been spirited in the last 2 to 3 months off the lows, but it hasn't been a leadership group for 3 years. You have to time these things very well, and if you do time them, you can be rewarded. At this particular point, you look on Friday on the chart. This is your topping tail. Okay, so at that particular point, that is your sell signal. Here's when it broke out. Okay, and here's your topping tail, and now your controlled pullback. The question is, does it hold the 8-day? Which it might not, or does it pull back and retest the 21-day? So at this point, I would be watching this area. This is about it's about 16. I think you wait a little bit. If you remember earlier this week, I covered it already. We shorted Goldman, thinking this doji would lead to some kind of weaker prices, and I think 117 was spoken about. Here's the 8-day moving average. If it doesn't hold that, it'll give you some clues that the banks could see a bigger retracement, so we shall see. But your time to have bought this was right here, not up here, or at least if you're going to hold it, you have less.
Retail, the XRT has outperformed the market overall all year long. It's riding its 8-day. What levels do you watch in this sector?
Like you just said, it's riding its 8-day. It's been a leadership sector. It's at highs, not a laggard group that is making a spirited move off the lows. And so if you look here, you'll see that yesterday, the action was good. Look at this nice green day. This too, there are times to add and times to take off. Here's when it took out the highs of the year with some potency. Here is your nice flag type pattern for continuation. Then I don't even say it showed any toppy type action actually. So at this point, if you look here, this would be the 8-day moving average. Here's your 21, which will probably move up at this point. Just have the right stocks within this group and stay with it, because maybe with lower oil prices, that means more money in the pockets of the consumers, and that could be helpful going into the holiday season.
For sure. The home builders have been another leading sector all year long. We saw 2 down days at the beginning of this week, but yesterday this group showed relative strength, rallying at the open. What do you think about this action? Is it still a stock you can own or an ETF you can own?
I think this group, just if you don't own it, you watch it, because every time that we pull in, the pull-ins have been bought, and until that changes, you shouldn't change. That's why they say the trend's your friend, and the trend in this has been up. I did a segment with Jim Cramer on this, I think in February, saying how potent the move in the housing stocks were, leading to probably higher prices this year and maybe even a housing recovery. And the numbers we've seen out of the housing sectors have been pretty impressive. I'm glad I bought my home a year ago, or what was it, April? Anyway, with that said, there is activity. And with this group, you take a look here. We talked about the 8-day yesterday. That's what it bounced off of. You do have at least an upper support area to trade against, and that's right here. You know, if this were to give way, which it could, because look at the size of the move that we've had. You know, here's your 21-day underneath, and then, you know, look at the leadership stocks in that area, like Lennar and Toll and KBH and blah, blah, blah.
Yeah, exactly. Well, let's take a quick commercial break, and we'll get back into it with some social media after this.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
Welcome back. We're going to get into the trenches with social media. We saw some nice moves in this group yesterday. We'll start with LinkedIn. It's best in breed, the macro. It's been a macro favorite. It's doubled over the last year. So is there a trade in this stock still?
I think there's still a trade in the stock, and if you're a macro investor, I still think you should hold it. Like this whole social media sector, I feel like it's a food chain. At the top of the food chain, it's been LinkedIn. It's had 3 quarters now in a row where they've had strong quarters. Institutions are starting to get just a little bit more confidence in them. We've talked about entries and exits. You look at the chart of LinkedIn, you will see, you know, one of the last, you know, real good entries was right here when it triggered above 109, 110. Obviously, some micro trades in the middle, and now it's setting up again versus the highs here. The high here of LinkedIn on that day was what, 122. We briefly took it out before consolidating. Take a closer look here at LinkedIn. I am long some. And at this point, you know, the longer it stays above this 8-day moving average, I think the higher the probability we'll get another trade through 125. So keep this on your radar.
Facebook is one that you keep your eye on for sure. Yesterday, it had hit a 7-week high. It was up 6.5% on news that they were going to have ads on mobile apps that weren't just their own. What's the trade here? Do you take profits at this level?
Well, it's always good to take profits when things are on the move, but you also want to stay with it. And this is much different than your LinkedIn. This stock had a horrendous IPO. You know, broke every rule of trading the IPO in the first 3 days. Then you had a trade a few weeks after that wound up failing. So at this lower level, we were looking at the action, and the day that Zuckerberg said he's going to hold for a year, and the company announced some kind of buyback, is the day it gapped up at 1850 and didn't fill it for the first time. If you take a look at the chart, there's been multiple entries ever since. That day was right here. If you missed that, nice little flag. This is when we got involved again around 1920, 1940. Another gap up. Didn't get filled. Here's another entry. So yesterday, we've been trying to stay with this. I think I was long 2 days ago, bought more above this like 2205 area, took back the 50-day. I think maybe it could digest these gains from yesterday, but overall, it's going to head up and probably test this gap area. And this gap area starts around 2454. So this trend since this low has been up, and it shows how you can be tactical, if something is heading in the right direction. You don't always have to just, sit and hold your nose and, go underwater. You could trade around it.
Groupon has been battered and bruised, but yesterday the stock jumped 14% on news that they announced that they would have a new mobile payment device that they would offer. Now, is this a stock that you could find a Q trade in?
Yeah, and we started with it yesterday. There was word that the CEO was going to be on CNBC. You saw the action in Facebook, so you figured maybe the other stocks within that sector will get some attention. So I just don't buy anything, but I looked at the chart. I'm like, around $5 looks pretty good. There's a pivot around 5.25. CEO is probably going to say something, hopefully positive, considering the type of move this thing has had to the downside. You put all that together, it equals a cute little trade. If you go to the chart, you'll see, from $30, this has been a complete disaster, piece of trash. So we call this the trash for treasure trade, or the treasure for trash. And ever since, you want to take a closer look, it hit the bottom. Here is when the first day potentially could have went back on your radar. You saw a nice wide range bar right there. I wasn't involved there. And then it held half of it, showing you some commitment to this move from down here. And then, it started to get a little frisky, pulled in. So yes, there was a day I bought it. It then cleared above 484, and then it cleared this little pivot. And I do think, why can't it test the moving average at 580, or maybe even fill a portion of this gap? And as far as a lower tier stock, for a treasures for trash trade, some of these things can yield you 20% pretty damn quick. And yesterday it was up 13%.
Let's take a look at Yelp. This one's making a triple top. What's it going to take for this stock to break through that top level?
Well, I just think that this group has to continue with activity. And yesterday, it tried to break above 26 and a half. It wasn't ready, but overall, this pattern looks pretty good. You go to the macro chart of Yelp, and you'll see that it wasn't a botched IPO like Facebook. It did, trade lower before putting in its bottom, and now it's trying to get through resistance. Just because it couldn't get through yesterday doesn't mean it's not going to happen, or it can happen. So at this point, I'm long some. I would have liked for it to hold and continue to move above it. So I would say, as long as it stays above 24, which is the high end of this upper flag, stay with it. Look at the commitment you saw here, and at some point, if it starts taking out 26.5, 27, you could see it move back to the highs here. But overall, this stock is acting much better, and it should be on your radar as a trading vehicle.
Let's get into some quick hits. We'll start with Home Depot. This is one of Stephanie Link's Action Alert Plus's names. She initiated a position in it last week after QE3 was announced, saying that would really drive the home values, and people are going to want to take care of their home here. Now, yesterday it hit a 52-week high, though, so is there really a trade in here?
I think if you own it, you hold it. And because we do stuff in the media, 2 years ago, I was asked I had to give them my retail stock of the year, and that was Home Depot. And look at the move, not the pound of the chest. I'm just saying, look at the move that Home Depot had. You can pick stocks. If I have time to go on CNBC and talk about it, you guys have time, to get involved and look at the move that it's had. Really, really nice. It's been providing leadership this whole year. Lately it's hugging this 8-day moving average. Sorry for that right there. So overall, it still looks good, still looks fine. I talk about retail stocks of the year, and this year it was Walmart. And Walmart also, not to be a brain surgeon, it was in a 10-year base, and I said if it gets above 62, you could see 75, and this all happened in 1 year in Walmart. A lot to like in the equity field. Equities are not dead. If I can go on and talk about it, you have time to push buttons. All I'm trying to say is take accountability and get some education in you. And you could find a stock like Walmart that has a dividend, has liquidity, and you can make money and feel comfortable.
Yeah, exactly. Another housing stock that Stephanie likes is Key. Now, this is a new bank play for her. She's played Wells Fargo and SunTrust before, but those two have had their runs. This is trading at a 10% discount to tangible book value. They have 20% exposure to the mortgage market. So, and with their restructuring program, she finds this one interesting. But what do you see as far as trade?
Charts following the 8-day. Any stock that's following its 8-day provides leadership. So I'm sure that this one can continue. So you look at the chart here. I know the banks might be soft off the open, but this is closed strong. Above this area right here, this area is what, 910. It can continue. You take a look. Maybe I'll go to the weekly chart to see where it can go next. And it looks as if this will be some resistance right around $10. But overall, it's looking better. And that you have a long-term 200-day at 1079. So this has been a long accumulation, a long lower level base. And at some point, it does look, if you want to go long term, that once this gets taken out, you can see higher prices here. And overall, I think the regionals have been acting better. I know that she liked STI, and that one was a leader as well. So, there is opportunity in some of these things.
Yeah, and she's taking profits in STI because of the run. But let's look at high beta tech. We've got Apple at over $700 for the second day in a row. Can this continue? Can it stay above 700?
It's certainly trying, and it's been a great vehicle for anyone. If you're a macro investor, intermediate term trader, an active trader, whatever you are, it's rewarding people in all time frames. You just have to make sure which time frame is yours. So if you look at the chart of Apple right here, you will see that, let me just clean this up a little bit so you can see what I'm trying to look at here. You'll see that ever since the earnings pre-announcement, it could have been buyable here, and since then gave you multiple entries. One here, another one right there, and then another one as it broke higher. You want to look at it, on a closer up level, you'll see that it is following this small ascending channel. So if they wanted to shake the tree going into option expiration, perhaps it could pull back to the 8-day, which now I believe is 692, playing some catch up. But it doesn't have to. We haven't seen an acceleration move in Apple in a while, so all in all, there's been a lot of other things to do where I've been just sitting and holding Apple. Your entry, really, the last swing entry was right here, and then you add it as it closed through the highs, and since then you've been rewarded holding it. But I do know momentum guys that keep adding at highs, they're not very happy right now because it used to make a new high and go $4 or $5. Lately, it's been making a new high and pulling back. A little different. But anyway, if it can get above and stay above 704, perhaps we get some momentum. If it doesn't, I still think it's very healthy and it'll be very easy for guys to hold it as long as it stays above the 8-day, which is 692. But as a macro investor, I think I've said 750. People are out there 900. I'm just talking about this year. 750, I think, is a realistic number by Christmas.
Well, that's all we have time for. So those are the stocks we're watching, the levels in the S&P we're watching, and some of the sectors we've got our eye on. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.